back to the channel, everybody. On today's video, we're going to be discussing Canadian banks yet again because it's one of my favorite topics. In particular, we're going to be discussing the Bank of Nova Scotia and what they just announced, what they just decided to do. It is shareholder friendly, and we're going to dive into its implications. Scotia Bank has decided to buy back 36 million shares as opposed to the previously announced 24 million. Exactly 2 quarters ago, all the Canadian banks were allowed to raise their dividends, which they did, and buy back a large percentage of outstanding shares, which they all decided to do. Now, Scotia said they were going to buy 24 million shares back. Now, this is a large sum of money. This is a large sum of the outstanding shares. But, they looked at the books, they looked at what they have for future prospects, what to do with the amount of money they currently have, and they decided, hey, we should buy back even more shares, so they're going to buy back 36 million. In order to understand how significant this is, we need to take a look at the total number of outstanding shares today. Currently, today, there are 1.2 billion shares outstanding, so, you subtract 36 million from this, and yes, that is fairly significant. That's roughly 3% of total outstanding shares. So what this means is if you're a shareholder of Scotiabank, you own now approximately 3% more of the company because the bank has bought back its own shares, thus, leaving less total shares out there for people to gobble up. Okay, so you now own more of the bank, which is very shareholder friendly. And we need to look at why they did this, though, because there's a lot of different options you can do when you have excess capital as a company. Increasing the dividend is an option, buying back shares is an option, paying down debt is an option, as well as funding future investments, investing in themselves. So the bank had to consider what kind of dividend yield they have right now, and they're currently paying 4.3%. So in essence, by buying back those shares, they're saving themselves 4.3% times 36 million shares. So this is a substantial amount of money. So they had to look at this money and say, can we beat 4.3% by investing in ourselves? Can we beat it by paying down debts, et cetera, et cetera? So they decided that this was the best option going forward. So management had to take a look at the share price today. They had to look at this $92. Yes, it is high right now. Their stock is doing good, obviously. They're $3 off the all-time high for this company, and their price to earnings is slightly higher than in traditional range. Right now, they're at 11.5, which is, like I said, slightly higher, but it's not crazy. So, if management decided to buy back shares right now, they must think to themselves, well, this stock has room to run. This has more potential. Now, if we remember, Scotiabank has the largest percentage in emerging markets. They have a lot of Latin America. So their investments in Latin America have not returned the value after the pandemic that, the North American markets have. Okay, so I imagine, this is my interpretation, I believe that they're going to see a lot of growth coming from the Latin America going forward. The CEO a couple quarters ago actually did hint at that, but they didn't say too much. It was just like a one-line sentence saying, we're doing super well right now, but in the future, we're going to do even better. Our Latin America markets will do better in the future. So I think the whole company is bought into this, and they're going to see a lot higher earnings coming out of the other markets, and it will raise the price higher. So management does think that this is a good time to buy back a lot of shares because they're only going to go higher. Buying back all these shares is going to do a couple other things as well. It's going to inflate the earnings per share because there's less shares outstanding. Earnings they're going to be the same or going higher in the future, so they're divided up into less number of shares, thus earnings per share go up. So it's going to look good for the company, as well as the payout ratio should be going down. So currently it is 46.3%, which is a little bit higher in terms of the Canadian banks, but in terms of a mature high dividend paying company, this is pretty low. 46%, you take this any day of the week on a normal company. Like I said, it's kind of the highest in the Canadian bank sector, but this is super safe. No one needs to worry about Scotiabank going forward. So it'll make the payout ratio go down and earnings per share go up, which makes the stock even more attractive to investors, for investors, everybody. It's good news for the stock. So I'm happy with the announcement today, but going forward, I would like to see some more investments into digital banking because, I've mentioned this before. we're a little bit behind the ball in Canada. Yes, we have the best banks in the world, but the fintech coming out of America is strong, it's advanced, and it is ahead. So when it starts making its way into the Canadian borders, we're going to need to be prepared. So I hope the management at Bank of Nova Scotia is taking stock of this and investing in their fintech. I mean, they have Tangerine right now. For those of you who don't know, the Bank of Nova Scotia bought Tangerine out many years ago, so they own that platform. Their online platform, I do have an account there. I do like it. Yeah, I mean, it's nowhere near the likes of like an M1 Finance from America, but it is good. It's on the better side in Canada. Another place that Scotia needs to invest some more money into is their iTrade. Their iTrade is from, like, I don't know, 1993 it looks like. My wife uses it, and I go on it with her sometimes, and it's a bit of a relic. It's a bit of a dinosaur. So there's some other things they need to be doing to invest in themselves to do better in the future. But I like what management did here today. I hope you guys did too. Like and subscribe, all that good stuff, and we'll catch you on the next video. I'll keep updating you on Canadian banks and other relevant stocks. I'll let you know what I'm buying, what I'm holding, and we'll see you in the next video. Thanks so much.